let's also talk to you about gold prices, because that is where you're seeing quite the sparkle come in. In fact, let's take a look at the moves coming in on a year-to-date basis as well for gold. You do have a bunch of triggers coming in for gold prices. So you do have central banks that have ramped up their buying. Other than that, of course, there's been a bunch of other triggers. Let's also quickly take a look at the year-to-date moves as well for gold prices, as well as silver prices and platinum and palladium, because you've in fact seen quite the move come in, 47% uptick coming in on gold prices as far as the year-to-date move is concerned. In terms of the key triggers for gold prices, you do have, other than central banks ramping up buying, you do have inflows into the exchange-traded funds, and that has been quite the uptick as well that we've seen. Other than that, in terms of the key triggers for silver prices as well, the industrial metal in fact has risen on the back of it being a supply deficit driven demand that we've seen for silver prices as well. As you can see on your screens as well, gold prices 47% on a year-to-date basis, and 77% uptick in fact coming in for a platinum, palladium as well, 63% gains coming in for the precious metal. But tell you what, let's also take this conversation forward with Navneet Damani, who's the Group Senior VP, Head Commodities Research at MOFSL. Thank you so much, Mr. Damani, for joining us this afternoon.
Thank you.
Well, absolutely. First things first, this is a good day to be talking to you. I feel like every week you do have gold prices hitting that record high. And when you take a look at silver as well, you've seen quite the strength coming in there. The entire pack is buzzing away. But first things first, let's talk about gold. What do you think have been the key triggers when it comes to gold prices, and where do you see it going from here on?
Well, central banks have been net buyer, as you rightly pointed out. Central banks have been the biggest buyer in gold over the last few months, quarters, and maybe for the year as well. But what has changed in the last few probably weeks or months is that the de-dollarization theme has caught up big time. Ever since the President Trump is on the hot seat, there is a lot of activity which is not gone down too well for the global macro framework, and a lot of countries are getting disturbed. So we are seeing a lot of a kind of de-dollarization activity where people are dumping in US Treasury bonds, and this money which is coming in from there is parking its way to gold and silver, which is what has been driving these two metals for the last few months. Now, will this rally continue? Of course, this is the buzzword from which we've been talking about for the last many years, and now it is ultimately catching up triggers. The pace of the rally is a little worrying at this point in time. It is not the view that the gold prices are not headed towards 4,000 or something. They are definitely headed there. Silver is head towards 52 or maybe $55 on the COMEX. But what is the pace, which is about 18% in the last 18 days, is what something is going to set a panic tone globally. I think on the domestic front, rupee depreciation plus the kind of momentum we are seeing in gold prices is what is causing some stir. And eventually, any knee-jerk reaction, any correction could be an opportunity where you see maybe buying emerge once again.
Well, absolutely, thank you so much for joining us with that entire update. Let's also get Sachin Jain, who's the regional CEO, India World Gold Council as well, on board. Mr. Jain, thank you so much for joining us this afternoon. I wanted to get your take as far as gold is concerned. First things first, Mr. Damani has also talked about some of the key triggers that we've seen for the precious metal, but what do you think makes it to your list in terms of the key triggers that have been leading to this kind of uptick in gold prices that we've seen?
First and foremost, a big thanks to you to get me on the platform. And while I agree to Mr. Damani's whole insight on central banks' continued buying and de-dollarization, which have been common themes over the last 18 months. But if you look at the last 3 months in particular, what's really triggered up is the financial markets consuming gold purely on the return that golds have done and gold has performed on. I mean, this year in particular, 46% up from Jan 1 to now. And if you look at just on the segment of the Western ETF market, that's been the core driver of the huge increase. I mean, central banks in particular over the last 3 months have been quieter. Even the developing markets have been quieter. But I think the key driver has been the financial markets performance and gold as an asset class. So that's been the core trigger. And if you ask us in terms of looking into the future, while as World Gold Council, we will not ever predict a price, but the reasons and the pillars of why gold gets stronger and there's an influence on the price, those still continue to be in the favor of gold. Some of them were highlighted by Mr. Damani already, But I think elements around de-dollarization, central bank buying that have been continuing. But gold as a hedge, gold as a asset for rainy day, those core characteristics of gold are right now at play.
Well, absolutely, those are some of the triggers that we've talked about. But Mr. Damani, coming right back to you, when you talk about the de-dollarization trend, do you see a continuation of this going forward? Do you think that this is going to be driving a lot of demand when it comes to gold prices?
Well, absolutely. Where do you put the money which is coming in from, say, central bank treasury selling? So it cannot be parked towards equities, definitely. So you would look for some alternate asset which is safe haven, and nothing better than safe haven asset like gold or maybe dollars. But since you don't have an option to invest in dollar, maybe the money is moving towards gold and silver, which are the highly liquid commodity assets which are globally renowned. So that is where the kind of pace and the exuberance we are seeing in the last few days, weeks, and months is what is pushing up gold prices. Of course, there is geopolitical tensions. Of course, there is news and buzz, and every day another round of tariff coming on some of the other product, which is adding to the risk premium to the prices. But the major trigger is at this point in time money flowing in from, say, other assets towards gold because of the financialization, because of the returns it is giving, and some bit of FOMO which is created in the market, that since you're not holding gold, the rally is going to get missed out, and a lot of people are buying it from that perspective as well.
Well, absolutely. A lot of buying from that perspective as well. Mr. Jain, I'll come right back to you when it comes to the key triggers, right? Because you do have a bunch of uncertainty in terms of geopolitics, as well as tariff uncertainty. There's a lot of conversation around trade talks that we've seen, and a lot remains to be seen in terms of what is going to be happening in terms of the US tariffs as well. So keeping all of that in mind, how do you think that really plays into safe haven demand for gold? Mr. Jain, that's for you. I believe you're muted at this point. Tell you what, I'll take that question across to Mr. Damani and Mr. Jain. We'll try and get back to you on this one. I wanted to understand exactly how the safe haven demand is playing into in terms of gold, and given all of the tariff uncertainty, how do you see that happening for gold prices in terms of the demand uptick there?
Well, demand has been pretty robust, and there is a supply shortage which is kind of emerging. And since the kind of demand we are seeing is not seen in the past few years, there's a kind of risk premium and premium which is built into the prices. If you see domestic demand, it's been very robust. Particularly coming to silver, the demand has been outrageous. There has been 4 successive years of deficit, and this is the fifth year where we see silver into a deficit. Demand from China has been growing exponentially, from EV, from solar panels, from 5G technology. These are some of the major demand triggers, and the kind of sales we are witnessing in EV is phenomenal. In fact, whatever the target was for the 12 months has been already delivered in the last 8 months in China. So that is the kind of traction we are seeing in demand from probably EV segment as well as solar panel. So these are two major driving factors at this point in time. Industrialization particularly has been one of the driving factors, and a new segment which is getting emerging at this point is jewelry, because a lot of people, since gold is becoming unaffordable or very expensive, are flocking towards manufacturing of silver jewelry or silver articles, and that is where a next round of demand is coming in for silver. So in putting this all into perspective, it looks like the next thrust or the next big move along with gold can be in silver, and maybe another 15-20% upside could be possible in silver before we end this year.
Other than 15-20% upside is what you're penciling in, but quickly getting a sense of the kind of prices that you have in mind, the kind of forecast that you have in mind for this year's end, as well as 2026, because we've seen quite the bullish calls come in from brokerages as well off late when it comes to the 2026 target as well. So keeping all of that in mind, Mr. Damani, where are you at with in terms of your forecast there for gold as well as silver?
Well, for gold, we were anticipating 3850 could be the target for end of the year, but it is very closer to what, as we speak, maybe we're about $10-15 shy of that level. So I think it's going to be a difficult revision for us also to upgrade our target to maybe 4,000 plus dollars. So, but we are already working in that frame. For silver, we've been very bullish and very vocal about 1 lakh 25,000 as target, and the current target stands as 1 lakh 60,000 or maybe $52 on the comics. So we expect that 2025 is going to be ending at a very positive note. However, for 26, we have to see that kind of exuberance that we are into, or the kind of momentum we are into. Will it carry forward beyond the first quarter of 2026 is what something that we have to analyze at this point in time. So we're not placing our bets for 26, but for 25, we will end on a positive note. Maybe $4,000 for gold and $50 to $53 for silver.
Well, absolutely, and that's quite the forecast, Mr. Damani. Thank you so much for that update coming in there. And I like that you called the demand for silver outrageous as well. Mr. Jain, I'll take it across to you when it comes to silver. What do you think are the key triggers, as well as what are you penciling in by way of prices for 2025 as well as 2026?
Ma'am, as I said, for gold, as world gold concept, we don't predict a price.
No, well,
But as I said, the pillars on which the gold prices are built upon are certainly in favor of gold, and these shall continue from mid to long term. And what I was reflecting in the past was that, you asked me about, well, what is the impact of the tariff was, for example. Now, earlier in the year, we said 4th of April, when the whole tariff is going to get announced, the whole settlement of the world will happen. It'll be clear. Now we're sitting way forward on the 30th of September. It's still unclear. And I think we've seen the similar issues, the geopolitics level and trade level over the last 2 or 3 years, that elements are not getting sorted in like overnight decisions, and things get prolonged on. And I think that prolonging of clarity is also having a positive impact on gold, which shall continue. That's the way of life we're in. Will the world become completely peaceful? Everybody will become each other's friends? Is a far distant possibility. And hence, every decision will take time to finally get settled. And hence, those elements give the confidence of the gold pricing. So that's the element. And I think the bases and the pillars of gold on which gold is built upon are very, very strong and very much in the favor of gold.
Well, absolutely. I understand that you can't give us color in terms of the prices, but those are the key tailwinds as far as gold is also concerned. I also wanted to understand, Mr. Jain, if you had an outlook in terms of the inflows coming in on the ETF front as well, because we've seen quite the uptick there as well. Could you help us with some more color on that front as well?
Let me reflect upon the Indian ETF side first. So the Indian ETF side, if you look at the AUMs on the 1st of January 2024, were about 41 tons. On the 1st of January 2025, were about 57 tons. Now, 16, 17 tons over the last year, you might say that is small, but based on the base value, it is fairly large. As of right now, we've seen upwards of 72 tons as AUM on ETFs, and we're seeing a constant interest on not just HNIs and financial investors, but people or average people on the floor or the street are getting interest. And I think ETF as a product is a regulated product. It's a phenomenal product. Not everybody understands that it's backed by physical gold. And hence, we foresee that gold ETF in particular in India is at the cusp of a growth. And we foresee a very phenomenal growth in the coming time because, being regulated, the ease by which you can hold it, purity, and all of those elements are taken care of. Now, globally, over the last year in 2024, we saw a net increase of about $18 billion. And if you look at just in the first few months of 2025, that was overtaken. And this year is going to be a bumper year, and we'll perhaps get back to the 2022 levels of global gold ETF. So from an ETF perspective, globally, Western markets, Eastern markets, everybody inclusive, it's going to be a very strong year. India, it's at the cusp of a very strong year.
Well, that's some key commentary coming in there, right? That we're still, given all of this demand that we've seen coming in for gold prices, we still have a lot to go forward to in terms of prices. But tell you what, Mr. Damani, I quickly wanted to get a sense of what you think about the gold-silver ratio that we've seen off late, because that has also been on a little bit of a higher level versus the averages. What do you think it indicates to you at this point in time, and where do you see that also going?
Well, if you see the 50-year ratio, the average around 68. If you see the 25-year ratio, the average around 70, 72. but only twice in the last maybe 10-20 years it has gone above $100 mark, or maybe the 100 mark, once in COVID, and secondly about 3-4 months back, and post that we are seeing a massive reduction in the ratio, and now as we speak it's around 80 to 83 levels. We see that 80 will be the base for the ratio, and maybe now 90 will be the peak for the ratio for the next few quarters, and it'll hover around this range for the next few, say maybe 6 to 12 months perspective. We do not see it averaging again towards 70, 72 in the near future, because we feel that both these metals are poised for some reasonable upside. However, if somebody wants to trade the ratio, we are on the lower end of the ratio where gold again could start outperforming, and maybe silver could gradually add up to the gains.
All right, and gradually add up to the gains. Thank you so much, Mr. Damani, as well as Mr. Jain, for taking time out and joining us this afternoon. So the pillars for gold are quite strong, and there's a big, long leap forward as far as gold prices are still concerned. Those are some of the key takeaways that you got in terms of the tailwinds as well.